Hello, I'm Terry Roche, head of Fintech Research at TABB Group, and today we're talking about blockchain accelerators. Joining me is Sandeep Kumar, Managing Director of Capital Markets at Synechron. Sandeep, welcome to TABB Forum.
Happy to be here.
It's a pleasure to have you. So blockchain, lots have been written and said about blockchain, but I think that we're finally at a real consensus of what blockchain is about. It's a next generation architecture that will be changing the process flows in capital markets. Could you please give us your view on blockchain and what's going to be transformed?
Yes, I think the financial industry is undergoing a lot of changes. Some parts of the industry is in actual need of this big re-architecture programs, and I think blockchain is going to be one crucial piece along with cloud, security, and other crucial pieces of this architecture.
So we're seeing this as blockchain as a next generation or sort of a trust protocol that there's going to be consensus and then blockchain will take it from there. But blockchain is only one piece of the puzzle. There's a lot of other functionality and services that need to be layered on top, yes?
Yeah, so what you're seeing today is a very early stages of evaluation of this process. There are platform providers like Ethereum and Hyperledger and Ripple. These are the top names that you will see within our world. But what is needed is many infrastructure components on top of this, which firms like Microsoft, IBM are providing in terms of identity, security, scalability of these blockchains for the industrialized use. But what you also need is a host of business applications, such in the area of OTC margins, trade finance, many aspects of post-trade processing that will benefit a lot. But you need those building blocks to make the whole ecosystem work.
So we've seen, as you mentioned, trade finance and in other areas where they perhaps are not technologically modern, and good place for proof of concept because it's highly manual and we're not putting any incumbent technologies at risk. So the idea is to do what? Is to create some components that are Lego blocks as a starter kit for perhaps not the tier one, but others that are looking to participate in blockchain experiments in the blockchain world?
Yes, absolutely. So what happens if you look at trade finance as an example, it's at least 10 years behind what happens in equities or fixed income markets, which are quite advanced today. So it suffers from a number of issues, such as the documents are flying around. It's a highly manual workflow among 5 or 6 different types of participants, from supplier to issuing banks to credit rating agencies and so on. And on top of that, you have the chance of fraud there by duplicate use of the documents. A supplier can bring the same PO or invoice and ask for credit from a different bank. The two banks won't know that this document has been used. So what we are building is many of these pilot ready applications where a group of banks or a consortium can take these applications and accelerate their trials with a small group of participants. So we are doing work in trade finance. OTC margin calls is another area where there is a need to bring many parties together and reduce the dispute management part of the margin calls. There are upcoming regulations which will increase the volumes of these margin calls, and this will make it completely impractical and also risky. It will tie up a lot of capital if you're not efficient with your margin call dispute management. So any place which requires consensus among the participants, a transaction is considered final when 4 or 5 parties sign off on this. I think these accelerators will prove that case, how we can solve those problems.
So there's an opportunity to create a fabric of applications and services to layer on top of blockchain distributed ledger to help clients with all of that functionality.
Yes, absolutely. Just like the Ethereum and Hyperledger, I think every bank is free to use these protocols. Similarly, what we are building is a kind of open source version of business applications, which our customers can take this and put it in their overall infrastructure and help accelerate their trials, which will take us to the next stage of the evaluation of this.
And one of the biggest challenges, perhaps, in that capital markets is the leader in the digital revolution and has, in some ways, a first mover disadvantage. Yeah. There's a significant amount of enterprise architecture and infrastructure already in existence. So perhaps the real challenge is, while the transition is happening, and perhaps even post-transition, for integration to existing platforms and services.
Yes, absolutely. I think when you are the first mover, you also have the burden of solving the initial teething troubles. So when I look at blockchain, there are few issues that need yet to be solved. You have seen a lot of action in the payments use cases, because this is one of the simplest use cases to solve. But when you move to trade finance, when you move to OTC margin calls, you need to ensure the confidential data of first bank is not seen by the other bank at all. So there is a need to do some work in data privacy aspects of it, and the scalability aspects of blockchain. And also very important, many of these blockchains are coming on different platforms. There is a need to make them interoperate. So for example, a credit rating service on Ethereum can be invoked by a trade finance blockchain, which is maybe running on Hyperledger. So a lot of these initial work is still work in progress. And then comes the stage saying, how do I migrate data from my mainframes? There are a lot of crucial data in the industry which still runs on the mainframe. So there's a need for tools, utilities to make all of this work along with the new applications which are coming up on the blockchain.
Well, I think that's really the core of it, a tremendous architectural reimagination and reconstruction for capital markets.
Yes, I completely agree. I think the legacy and the blockchain will survive, coexist for many, many years. It's not a one-time switch that you can move everything to blockchain. And that's why this needs to be industrialized. There is a need for many, many participants to provide the working components and make it available for the entire industry so that industry as a whole can succeed.
Okay, well, Sandeep, thank you. Sandeep Kumar, Managing Director, Capital Markets of Synechron. We're seeing a world of a fundamental architectural refresh for blockchain and opportunities for components and software to make that transition a bit easier. I think certainly will be welcomed by the marketplace in a very large and complex restructure. Thank you.
Thank you for having me.